with the Swiss yen. First of all, we'll get the Swiss yen loaded up. If you've got any questions, remember, don't forget to put them underneath. Don't forget to get my free training underneath this video. Like, share, comment, follow, subscribe. Do all of it if you can. Like I said, I post practically every day. So your Swiss yen, I've done many videos on this. I've done them on YouTube, done them on TradingView. Your Swiss yen in particular, you can see has rallied and rallied and rallied and rallied away from the point it got to. Well, in fact, you could say it was even lower back in January 2019. So as we went into 2019, just off the back of a fall on the Swiss yen, various other yen pairs, you suddenly get this really long surge. And you could almost say, and I'm sure a lot of harmonic traders are interested in this, you had your point of increase there, you then get your peak, and then you get your trough, and then you get your second wave up to the top. Okay, now this wave is significant to a lot of people because anyone who's shorting it, there's two kinds of people. They're either controlling their risk, they've got risk management like I teach my academy members, or they have no risk management and they're panicking and they're shaking and sweating and things are getting really bad really quickly. Okay, I know what camp you probably want to fall in. I would probably say it's not the one where you're terrified and you can't sleep at night. No one wants to trade like that. And the only thing that makes you trade like that is the fact that you're sat there saying, you know what, if this falls like that, I'm going to be rich, everything's going to be great, and that's the end of it. Now, I was explaining this actually to someone yesterday. The problem with that is what you think is probable could be very improbable, right? It's the opposite of a black swan. I mean, if you read the Nassim Taleb Black Swan book, or if you've heard about it, black swan is where something happens that was unexpected, but on the flip side of that is also something that doesn't happen that is expected. Now, there's a big misconception among lots of traders because they seem to think that their views are superior to reality. And they bank everything on things like this. They look at this move on the 12 monthly, perhaps. They say, wow, this is extortionately high valued. Okay. And I'm going to sell the farm. I'm going to get rid of everything I own. And I'm going to look for an impending reduction in price. I'm going to look for a mammoth fall. Now, I believe as well that this will fall and fall very harshly. And the reason why is because if you look at the move up, you've gone 106 to 166, okay, 60% or so, 168, and you haven't pulled back. Now, if you look at every single other time you rally that far, you get an enormous thumping move down, okay? That is fact. That has always been the case. That's always what has happened after a move up. But you haven't had it for a significant period of time because the way the Japanese are constructing their economy. So I do believe, yes, I think you will get a larger fall. I do think you'll come back to where I've drawn this line, where I will draw this line at least. But the problem with that for a lot of people is they have zero risk management plans. So even a 10% retracement, just a measly 10%, it's not very far. Okay. Well, it depends where you draw the line, really, doesn't it? If you fell back to here, it's just above your 23.6 fib. Okay, so if you look at the point where you're getting early price rejection and you go all the way from 166 where you are now to 151, it will bring you to an area of local 12 monthly support, and you can see the top of that red candle is also there as well. So if you do stumble on this bit with this rejection here, that may be the case, but I think ultimately you'll get lower. The key and salient fact here is that if you look how far away your moving average is. It's 108 versus 166. That is ridiculous amount of room, ridiculous amount to get back to. Okay, you can see the reduction in value here is 10% or so, so it would have to lose 10%. 10% is not an enormous amount. Okay, so yes, I do think it will fall a long way, at least. However, there's no good whatsoever in saying, well, that's great, and I'm going to short everything I've got, because there's nothing stopping it going 10% higher. I do think you're going to get a big fall. I think that's more likely, but it doesn't mean it's certain. And that's the problem people have. People who are high risk in the markets don't get that. They see things like this, but they're not thinking about the long-term process of making money trading. Okay, to make money trading, you've got to be aware of black swan events, and you've got to be aware of how, just one of them causing the complete destruction of your account is not good enough. You can't be like that because you're always going to lose your money at some point, right? That's the point. Yes, it's rare. Yes, it doesn't happen very often, but it doesn't need to happen often because when it does happen, it's so catastrophic that it ends your trading. Okay, so to deal with that, you have to have set risk management plans. Yes, absolutely, my bias is short. I would absolutely, if you're buying it, you're probably crazy. I wouldn't do that. Right? Yes, it was a short here and it's gone up higher. I still wouldn't be buying it. The fall is much larger than the potential upside based on history, based on what you can actually see. Okay? That is a 100% move. Right? And the retracement, the max retracement you got there was this, was 133 to 108. Now you haven't had that significant move back and you've gone up, but the key part of this is that. Can you think about the weatherman or the weather lady? All right, they say, okay, well, climate change is coming in, and the average temperature this time last year was this, and now we're all the way up here. That is an above average temperature, and you would expect the temperature to then decline and even out. That's what makes an average. That's what markets do. They only go up for a certain period of time before they fall. I can see an Academy member, a new Academy member in there. Welcome aboard the Academy. And I won't say your name because I don't think you probably want people to know, or you might, I don't know. But great to see you. And remember, you can ask me privately any questions that you have because you're a paid member. This lesson is actually very important, but nonetheless, what I'm saying is more or less the factual truth. You've seen the price fall previously, and it's not financial advice, obviously, but what I'm saying is if you were short at this point, which you should have been, you should be short at this point as well. It makes no sense to do anything otherwise based on what you've seen. Every single push up, radical push up, is followed by a larger fall. Your stock oscillator is coming up here. Really good question as well. Why does the Japanese yen keep losing value? You can read exactly about that by looking at the Bank of Japan, their reports, everything like that. The currency is getting weaker because they're more favourable on exports, the way they position themselves. And that's gone on and on and on, and eventually it's too much, and they have to make a massive change in monetary policy. So the exact answer to your question is the economic status and the monetary policy within Japan. That is why. They want this to happen. The currency gets weak, and then they need to reposition it because it gets too weak, right? So as long as that goes on, the yen will keep losing value. Ultimately, that swaps, as you saw here, every point, and market forces do it anyway because they get short and the price falls. People who have bought this are at ultimate value on their position. Okay, so you've got to put yourself in their shoes. You took it long, you're 60% in gains. You might have made a whole year's worth of your profits. Why would you not kill it? Okay, and people will. You have large institutions who do that, and large institutions will get manically short on this, like they did there, and they'll make millions, hundreds, thousands of millions of dollars. But here's the big but: they have risk plans. If that doesn't happen, if you don't have risk plans, you won't get anywhere near making money. So you have to be very careful. Mainly that's done with light sizes, hedging, spacing out, all these kind of things. So that's for another time, but thanks for watching with my Swiss yen analysis. We're going to move on to another set.